Welcome to the weekly market update. I'm the Options Overlord, and this is the market week ending Friday, August 21, 2026. Educate, discipline, execute. Let us get into it. First, the ground rules. Every week, no exceptions. This is educational content only. It is not financial advice, and it is not personalized to you. Options carry real risk and are not suitable for everyone. Nothing here is a recommendation to buy or sell any security. There may be tax implications to any strategy, so speak with a licensed professional about your own situation. Everything I show you is a framework for thinking, not a signal to trade. Accountability first. Every week, this channel sets a rule for the week ahead, and every week we come back and grade it in public. Last week, the rule was watch VIX above 20 if breadth slips below 60. Both conditions were required. The verdict held. Breadth did fall below 60, finishing at 57.76%. So the breadth warning fired, but VIX finished at 15.13, still below 20. One condition triggered, the second did not. So the full stress rule did not trigger. The scoreboard. The S&P 500 closed at 7,674.37, down 1.43% on the week. The QQQs closed at 713.44, down 2.41%. The Dow closed at 53,277.01, down 0.85%. The VIX finished at 15.13, up 0.88 points. The 10-year Treasury yield finished at 4.74%, up 4 basis points, and breadth fell to 57.76% above the 50-day moving average. Options priced a weekly S&P swing of about 2.1%, while the S&P actually moved 1.3%. Realized movement stayed below the implied weekly move. The number of the week is breadth at 57.76%. The regime map. One picture, 4 boxes. Where are we? This week we moved into the narrow breadth, low to moderate volatility box. Breadth is 57.76% below our 60% watch line. IV rank sits at 12.48 for SPY, 32.72 for the QQQs, and 5.96 for IWM. Translation: participation weakened sharply, but headline index volatility did not move into a stress regime. Breadth deteriorated before volatility confirmed stress. The premium read, where the market is actually charging for risk. The QQQ IV rank rose to 32.72 and remains the highest of the three. SPY is 12.48 and IWM is 5.96. All three IV ranks increased from last week, meaning option pricing became somewhat richer as breadth weakened, but the headline VIX still stayed contained. Rising IV rank with weaker breadth is a warning, not a trade signal by itself. Selection, price discipline, and defined risk still matter. If you want the free checklist I use before selling a covered call, the covered call qualifier is linked below. What actually mattered this week? The lead was higher yields hitting technology while market breadth weakened. The QQQs fell 2.41%. The S&P fell 1.43%, and the Dow fell 0.85%. Technology was the weakest FinViv sector, down 3.17%, while WTI crude oil moved the other way, rising 5.66% for the week. On rates, the 10-year Treasury finished near 4.74%, up 4 basis points. and the 2-year near 4.23%, up 6 basis points. The takeaway: yields stayed elevated, oil strengthened, technology took the hardest hit, and breadth broke below 60, even though the VIX stayed contained. Risk watch: the VIX reads 15.13, still low to moderate, but breadth is already below 60, so next week's event cluster matters. Consumer confidence arrives Tuesday, August 25th at 10 a.m. Eastern. On Wednesday, August the 26th, PCE inflation and the second estimate of GDP arrive at 8:30 a.m. Eastern. Jackson Hole begins Thursday, August 27. On earnings, there are event risk examples, not trade recommendations. Nvidia on August 26 with an implied move around 7%. Salesforce on August 26 around 7%. And CrowdStrike on August 26 around 10%. The discipline breadth has already fired the warning. PCE, Nvidia, and Jackson Hole can help determine whether volatility confirms it. The Overlord Read: breadth broke 60, technology took the hit. The divergence is the important part. Breadth dropped 11.62 points to 57.76%, while the VIX rose only to 15.13. Why it matters: the prior rule did not fully trigger, but one half of it did. Participation weakened before headline volatility confirmed broad stress. The QQQ IV rank rose to 32.72, above SPY at 12.48, and IWM at 5.96. All three IV ranks increased from last week. The warning is broader participation, not panic. So here's the rule for next week, set now and graded next Friday. Watch VIX above 20 with breadth below 60. The watch level VIX-20. We are keeping the same two condition stress definition. Breadth is already below 60, so the missing confirmation is a VIX break above 20. If both conditions are present together, the stress rule triggers. If breadth recovers or VIX stays below 20, it does not. That is the line in the sand, and we will score it in public next week, held or broke, with the reason. The free covered call qualifier is linked below. Thank you for watching. Stay disciplined. Let us go.